it's not that buying the Bitcoin dip is bad. It's not bad. It's just inefficient. And let me tell you who it's inefficient for so that you don't get confused. I'm specifically talking to people that have been stacking Bitcoin for a long time, basically. It's not necessarily that, but it's a certain demographic of people that are 35 to 55 with high income, most likely W-2, most likely own their own business jobs in the United States, okay? With kids, live in the suburbs. That's who I'm talking to, because I think that market has been fully underserved by the Bitcoin head talking class out there, okay? And so if you are not in that bucket of what I just described, continue buying the Bitcoin dip. Hammer the Bitcoin dip. If you are establishing your first 0.21, which is a big deal, owning 0.21 Bitcoin is a big deal. You and everyone should have a quarter of a Bitcoin. Everyone should focus on getting to that, okay? Owning 0.21 Bitcoin puts you in the top 1% Bitcoin holders in the world. And so if you are still stacking towards that, don't stop. Use this dip as an opportunity to get that. I'm rooting for you, and I'm incredibly glad that you are here, okay? For people that have already been doing that, and have phased out of kind of all of the classic, buy the Bitcoin dip advice, and are looking for real concrete ways to incorporate Bitcoin into their personal finances in a way that is going to impact their life and their family, and they're just looking for a fresher way to do it, but still understanding all the philosophy of Bitcoin and why it still is the greatest opportunity in the world, okay? It's not efficient to just be mindlessly smash buying spot Bitcoin now in a world of strategy preferred shares and Bitcoin covered call funds. I've now talked to about a dozen of you from more than a dozen, but I've had really, really good one-on-one conversations now, and I'm starting to pick up a little bit of patterns, okay? And the patterns are people have crushed it on the growth side. They've stacked Bitcoin, their net worth number has gone up. People are feeling like a transition of wanting to transition to a new phase of life. And in order to do that, cash flow matters. Cash flow matters because your net worth number can be as high as you want it to be. But if you don't have a dialed in monthly cash flow, you don't ever feel wealthy. You don't feel like you're over the hump of having time-based freedom and having the ability to not be running the numbers on going out to eat or buying a new car or the whatever. Everyone, I don't have to describe lifestyle stuff. You guys understand what I'm saying about just the lightness of being able to flow through life with ease, okay? Cash flow helps you do that. Bitcoin adjacent cash flow products are now here. Bitcoin covered call funds, where you sell away some of the upside and collect a premium today as income, is perfect for a time like this when Bitcoin is not going up, okay? So you don't have to, up to this point, there's only been, up to this point, YouTubers would get on here. I would never do this because I didn't fall in this bucket, but YouTubers would get on here and they'd be like, dude, you need to be actively trading and you need to know when the bull market and the bear market is ending and you need to sell at the top and buy at the, that is not an act, I'm not pitching active trading like that. And I'm not, so what's good about Bitcoin covered call funds is the ETF sells the covered calls for you. You pay a fee to them to do it, and then you collect monthly income while still having some Bitcoin upside. So it's a great hybrid that is more efficient towards the goals of continuing to grow your net worth, but also continuing to pull pressure off of however you're actively making income right now, okay? The other version of this, the other great products that have been coming out now is strategy preferred shares, because they've realized the same thing. they've realized the same thing, that when you go out there and you're telling people, hey, you should really buy Bitcoin, it's the best opportunity in the world, but then it has random 30% and 40% corrections, people say, no, thank you. Like, there's still a large, call it the majority of people in the world that are like, yeah, no, thank you. So they are now producing products that create varying degrees of stripping out the volatility of them and handing some monthly or quarterly income to the investor with then some upside or no upside, okay? And so my favorite one of this is Stretch. It's just the most basic, like, main one that is the easiest to understand. And the other reason why I like it is because Stretch has very little to do with MicroStrategy or strategy, like general stock. And so another recurring pattern that has popped up is people have been feeling, again, Bitcoin people that fit the net worth buckets and fit the kind of profile that I've been talking about, they've been itching to mix it up a little bit from just buying spot Bitcoin, which is why the Bitcoin treasury companies are enticing, which is why strategy general shares are enticing. And they're not wrong. That thesis isn't necessarily wrong. We all want to see Bitcoin financial services companies be 10x and 100x bigger than they are. So then you see all the Twitter talking heads getting into VC investing and funding VC early stage Bitcoin startups, and that's all noble and good. What's hard about that is it's basically like trying to hit a parlay bet of Bitcoin working out and then the exact financial services company that you're betting on working out. That's extremely hard to stack those two things together. And so that's the reason why I don't love the like venture investing or trying to choose exactly which financial services company is like gonna work out and make sure that the value accrues to the general shares. Funny thing about this, honestly, VC and startup like almost have the same problem that crypto does, in that it's very hard to explain how value accrues to the underlying share. Strategy is an example. Like, there's people in the comments that have talked about like, hey, the preferred shares are frustrating because it's now like pulling attention away from strategy general shares, and we're not really sure how that's going to work. And to be honest, I don't really know how that's going to work either. Like, you can get some more fancy finance people on here and be like, well, MNAV of Bitcoin, like, in such and such. Again, maybe I'm open to that. We'll continue learning about that. But for today, the 35 to 55 year old that's trying to hit the different net worth goals, that's trying to put their kids through college, that's trying to, have a bomb Christmas, that the price of hanging Christmas lights on their house just went up by $400 compared to last year, but the neighbors are doing, and like the next kid's like gonna join private school, all that stuff. Nailing all of that stuff at that phase of life, cash flow attached Bitcoin can do that right now. Stretch pays 10.5% dividend, and they are incentivizing it and coaxing it to trade at par, which is $100, which will hold its value at par. And so maybe what's going to happen, I won't say most likely, I'm saying maybe what will happen is, because Stretch is trading more down closer to 90 than closer to 100, they might have to increase the dividend from 10.5%, okay? So by buying the dip on Stretch instead of buying the dip on spot Bitcoin, you get less volatility, you get 10.5%, maybe more of the, that's an annual number, but it's paid out monthly. And because they've already come out and said how they want it to trade at $100 and they're going to help it trade at $100, you have a little bit of built-in upside of anytime you can buy Stretch for under 100, it's gonna float back up to 100. So buying spot Bitcoin isn't bad, it's just inefficient. There are other things you can buy that will create cash flow for you and will feel fresh and will kind of help you get through this frustrating, Bitcoin correction bull/bear market.
If you made it all the way to the end, I think you would really enjoy being a channel member. It's a few bucks a month and you can cancel anytime. You can get members only live streams, join our private Discord chat for members of this channel. It's called the Bitcoin Personal Finance Think Tank. And so really trying to bring together people that are evolving the way that they incorporate Bitcoin into their personal finances. We have growth people, we have business owners, we've got real estate people, we've got people that go hard on dividend funds. And so it's a really good mix. Click join right next to the subscribe button and we'll see you on the next one.